Hello and welcome again. So today we will be talking about a very important update, and it's to do with the recent oil price collapse. So this is very much at the forefront of pretty much all news articles at the moment. And what we'll be talking about is what's caused this oil price collapse. Has it happened in the past? What lessons can be learned from it? And most importantly, is there an opportunity in here for us to make some money? So let's begin. First things first, there's two types of oil when we're talking about oil prices. So there's WTI and then there's Brent. This video is not one in which we're going to go into too much detail about what each one means, but for the purpose of this video, just suffice to know that there's two different types of oil products when we're talking about oil prices in general. Brent crude prices tend to be slightly more expensive than WTI crude. So guys, this is the current prices they're at. Less than $20 per barrel. So this price here relates to the cost of oil per barrel. So oil prices have basically collapsed. Brent crude is trading around $28. That's a steep decline. So if we were to look at the prices even a year ago, so this time last year it was 3 times the price it is at the moment. So currently it's around $19, and this time last year around the $60 mark. I mean, that's a ridiculous drop in price. So this day last year oil was at $63.40. We're going to focus on WTI for today. I mean, as you can see, both types of oil have suffered similar percentage of losses. However, we're going to be talking about WTI today. So the current price of WTI crude oil is around the $19 mark, between 19 and 20, let's say. This time last year it was around $60 to $65. 3 months ago, so that's really not that long ago at all. What we had 3 months ago, so that would have been January 1st of January, about $61 a dollar, sorry. So it's been falling. Here we have 1st of February 2020, 1st of January 2020, you can say $61. Then it's gone down to around 50 towards the end of February. Then we've reached March, 41. 3 months ago it was around $60 again. 1 month ago, so we're currently in April, so March 2020, it was around $45, $40, around that mark, let's say. 1 month ago we've got between 35, let's call it 30 because it was quite volatile around this time, $30 to $40. I mean, that's a ridiculously steep fall in oil prices. So what's actually going on? And is this time for us to buy and invest in oil or oil related stocks? What's the cause behind the oil price fall? So the way oil prices work is there's a meeting called OPEC, which includes several different oil suppliers who together discuss at what price to fix oil as a result of this OPEC meeting. So they all talk to each other as part of this meeting and decide on a particular price that is to be set for oil. Now, a very common and simple way to explain how any prices work, not just oil prices, is to think about supply and demand. Now, why is gold such an expensive product? Why are diamonds so expensive? Because they're rare. The supply for these products is limited. So when you have an excess of demand for any product, be it oil or any other product that you can think of, if demand is high, then clearly that will lead to prices going up. And similarly, when demand is low, prices for that product will fall. In the exact same manner, if supply is high, so there's lots of different people able to provide a service, for example. Say you need a haircut and there's loads of local barber shops around where you live. Now they have to compete with each other to get limited demand in your local area. Because as a customer looking for a haircut, you can go into any of these barber shops to get what you need. So if the supply is high, they need to reduce their prices to attract customers. So as a very basic philosophy, if there's high demand, then prices are high, and if the supply is high, then prices are low, and vice versa. So going back to our oil example, what's actually happening in the world at the moment? So what's happening is that demand, firstly, is clearly not very high because of the coronavirus impact. Everyone's working from home. Businesses aren't operating to their full capacity, if at any capacity at all. So demand has fallen. Demand for oil has fallen by quite a bit, and not just in one country or two countries, globally. Lots of different countries are hit by this, and globally there has been a shift in the demand for oil that has gone down. But that's not actually the main problem here. The main problem here is supply driven. So this shock to oil has actually been supply driven. So what happened was that Saudi Arabia did not agree with the most recent outcome of the OPEC meeting that they had, and so they have decided to engage in a price war with Russia. And what that basically means is that they're oversupplying oil. And by doing that, they're pushing prices down. They're pushing the price of oil down by oversupplying oil. So now for countries such as Saudi Arabia and Russia, who are quite reliant on oil prices and sales from oil, clearly the recent lack of demand has impacted them. Also, they've got various other issues that have been brewing, such as new producers coming on the market, such as Iran and Libya. So you need to make sure. So for them to gain market share, the best way at the moment, or so they thought, was to cut oil prices. Cut oil prices. Make oil cheap and grow the demand. So for oil. So that's basically in a nutshell, a very quick gist of what's actually going on. So demand is low and supply is high, and that's pushed the oil prices down. So now we come to the best part of this presentation, which is talking about what does it mean for us as investors. So the recent collapse of oil prices has led to lots and lots of opportunities for investors, because this isn't sustainable. I mean, I'm not saying that I'm calling out the oil price having hit the lowest it can go to. It's, bear in mind, there's a very decent chance, and some analysts are saying that it can also go as far down as $15 per barrel. So it's a pretty steep decline, and it may be set to continue. But nevertheless, at $19 or almost $19 per barrel, we've got a pretty good deal here. So considering, the past year, the average price of oil had been trading around the $60 mark, sometimes higher. I think it's a reasonable bet to assume that, oil prices will go back up. This clearly isn't sustainable. The other thing is, even if it was to fall, how far can oil possibly fall? Zero? Well, it won't happen, but let's just assume $0. So as a buyer, one thing to note is that your downside is limited, so at such a low price. So providing you have enough collateral in there to sustain the losses, if oil were to go down any lower from its current market price of $19, or around $19. So if we say, you don't know if it's hit the end yet, but provided you have enough collateral, enough money in your account to see through the losses. So I have a cushion in there to protect you from any losses. When the prices do reverse, you can set to benefit steeply. I think even if you were to lock the price in at the moment, i.e. buy oil at the current price it's at, the rise back to 60 or even 50 or even 40 would be doubling your funds. So I think there's a great opportunity, and now I do believe that now is the right time to buy oil. We will perhaps see further decline in the prices, but we're not, I believe, too far away from the bottom. But that's just my opinion based on the research that I have done. Do the research for yourself and have a think about it. One option is oil by itself. What's the other option we have? The other option are stocks that are impacted, companies that are impacted by the oil price. So oil stocks. Now, there's lots and lots of different companies in the energy sector that would have and have been impacted by the oil price collapse, but I'm going to mention a few here. So we've got Occidental Petroleum that you may or may not have heard of in the news. Now, this company was already, struggling a little bit because it had recently acquired extra debt for an acquisition that it conducted. So it was already in a bit of a troubled spot, and the recent oil price collapse hasn't really helped. BP, similar kind of story. Shell, similar kind of story. If we look at the stock for Occidental, similar kind of story. So you can see it started off the year with priced at around $40, and the current share price is around 14. So a massive drop. It's even reached as low as $9 per share. So clearly, something to be worried about, I guess, but also an excellent opportunity. So you can see the steep fall in share price. So this is the start of the year, and you can see straight, pretty much, it went up, and then since then it's pretty much gone down. It has had a small recovery since, but nothing too spectacular. So I think Occidental is a good buy. Clearly, you can't just base it on prices. It's not because you can't just say because the price has fallen, now is the time to buy it. There's various different reasons. You should do your research into it. But I do think the recent oil price collapse does lead to a good opportunity for us to go into and buy oil.